My name is Steve Myers, and I want to thank you for taking part in this exclusive Monday morning interview with Jim Rickards, the financial threat and asymmetric warfare advisor for both the Pentagon and CIA. These agencies, that include the CIA, FBI, Army, and Navy, they've already begun to estimate the impact of the fall of the dollar as the global reserve currency, and our reign as the world's leading superpower being annihilated in a way equivalent to the end of the British Empire post-World War II. And the endgame could be a nightmarish scenario where the world falls into an extended period of global anarchy. Jim Rickards fears he and his colleagues' warnings are being ignored by our political leaders and the Federal Reserve. And we're on the verge of entering the darkest economic period in our nation's history, one that will ignite a 25-year Great Depression. Today we're going to examine everything he's uncovered, because the bedlam could begin within the next 6 months, which is why every American should hear his warnings before it's too late. Jim Rickards, thank you for joining us.
It's my pleasure, Steve. Glad to be with you.
Jim Rickards, author of Currency Wars, notes, the Fed is insolvent on a mark-to-market basis. The Fed has wiped out its capital on a mark-to-market basis. Of course, the Fed carries these notes on its balance sheet at cost and does not mark them down to market. But if they did, they would be broke.
First of all, I give Senator Rand Paul a lot of credit. He's one of the people who understands the dangers here. But the problem is not limited to the Fed. It's infecting the private banking system as well. There's about $60 trillion of debt on the balance sheets of our banking system. For a long time, debt in the banks grew at about 2 times the rate of growth in the economy. But lately, this has exploded. Today, it's up to 30 to 1. In other words, for every dollar of economic growth, there's $30 of credit being created by the banking system. The whole thing's unstable. Critical.
Jim, are you seeing any signs that our stock market has reached a supercritical state?
Well, unfortunately, yes, we're seeing a lot of signs of this. One of the ones that's really fundamental and really important is the ratio of stock market capitalization to GDP. Because you remember, the value of all the stocks in the stock market, that's supposed to represent the fundamental economy. It's not supposed to be off in a world of its own. But if you look at what's been happening to that ratio recently, it's going sky high. It's 203%. Prior to the recession, that number was 183%. Go back to the famous tech bubble, the dot-com implosion of 2000. At that time, it was 204%. And if you want the scariest news of all, just prior to the Great Depression, that number was 87%. In other words, the stock market capitalization as a percentage of GDP is twice as high as it was just prior to the Great Depression. So that's a really good metric for saying, hey, is the stock market heading for a crash? All the data says, yes, we are. But there's another metric, another warning sign, if you will, that's even more frightening, which is the gross notional value of derivatives. There's a certain number of shares of IBM that are outstanding, but we know what that number is. But there's no limit on the derivatives. I can write options and futures on IBM stock all day long and all the other stocks on the stock market. And that's what's been going on. Now, the gross notional value of derivatives in the world today is over $700 trillion, not billion, 700 trillion. That's 10 times global GDP. This collapse is unavoidable. So, we ask ourselves, how bad can this be? Well, what happened in 2007, 2008 when the markets collapsed? We all remember the value of stocks going down, real estate going down, housing going down. All that lost wealth was $60 trillion. The problem is now the system is bigger, so I would expect the lost wealth this time to be $100 trillion, possibly a lot more. We're in this critical state, getting close to the supercritical state where the system implodes. But it takes a catalyst. It takes a flashpoint. There are a number of potential flashpoints I've investigated.
Jim, in a few moments, I want to discuss the steps Americans need to take with their investments and personal finances to prepare for everything you and your colleagues are predicting. But now let's quickly focus on some of these major flashpoints.
One of the key flashpoints we're looking at is foreign ownership of U.S. government debt. Now, this is a very important thing to understand. We all know that the Treasury has issued over $17 trillion worth of debt. The question is, who buys it? A lot of U.S. debt is owned by foreigners. Who owns it? China, Russia, other countries that are not necessarily our friends, but they can dump it when they want to. Well, guess what? That's actually what's been going on. Recently, foreign holdings of U.S. government debt have been plummeting. But it gets even more interesting than that. We talked earlier about the project I did for the CIA, Project Prophecy, and we said, you can see not only market action, but rivals, enemies, terrorists, and others operating in financial markets. So we all know that Russia invaded Crimea in the spring of 2014, and Crimea is now effectively part of Russia. So let's say you're Putin. You know you're going to invade Crimea. You know you want to take over eastern Ukraine. You can expect U.S. financial sanctions. So what do? You basically mitigate the impact of the sanctions. Start dumping treasuries in advance so that when you make your move and the treasury tries to come against you, you've insulated yourself. So now you go back and look at October. Here's Russia dumping treasuries month after month. That was a clear signal that they were getting ready to do something to engage in financial warfare against the United States. Guess what? It's worse than that. We know the Russians and Chinese are working together. So is it any surprise that when the Russians started dumping, the Chinese started dumping also?
Congratulations, Mr. and Mrs. Parker, on your retirement. We'll be happy to cash out your retirement account today. Just a few of the details. Great. Now let me go get your money. There's a little bit more. Okay, we have 5, 10, 15, 20. That's it. Now don't spend it all in one place.
Your true wealth is your time and freedom. Money is just a tool for trading your time. It's a container to store your economic energy until you're ready to deploy it. But the whole world has been turned away from real money and has been fooled into using currency. A deceitful impostor that is silently stealing your two most valuable assets, your time and your freedom. Welcome to the rabbit hole.
We are entering a period of financial crisis that is the greatest the world has ever known. The wealth transfer that will take place during this decade is the greatest wealth transfer in history. Wealth is never destroyed, it is merely transferred, and that means that on the opposite side of every crisis there is an opportunity. I believe that the best investment that you can make in your lifetime is your own education. Education on the history of money, education on finance, education on how the global economy works, education on how all of these guys, the central bankers, the stock market, how they can cheat you, how they can scam you. If you learn what is going on and how the financial world works, you can put yourself on the correct side of this wealth transfer. Winston Churchill once said that the further you look into the past, the further that you can see into the future. This program is all about creating your own crystal ball, being able to gaze into the future, being able to change this crisis, the greatest crisis in the history of mankind, into your great opportunity. The hidden secrets of money, some of them are hidden in plain sight. They're like right in front of you. The way the monetary system works is something that isn't actually hidden away from all of us. It's out in the open, but it's complex and people just they can't see how it works. It's hard for them to imagine that we're living in such a hoax. Others are meant to be secret, but the truth is slowly coming out, like the Federal Reserve being a private corporation and not really part of the US government. But when I started studying this, what I found was that there was no place that I could point people to where they could get it all in one spot. And so I basically decided to write my book about it and consolidate monetary history, economics, the markets, fundamentals of gold and silver. There's a lot of smoke and mirrors in economics, and I've sort of made it my job to lift the fog for people. Welcome to Egypt. This is where it all began. Roughly 5,000 years ago, the Egyptians started using gold and silver as their predominant form of currency. But it was not yet money. The pieces of gold and silver that they were using were odd sizes and weights, odd purities,
So it still was not interchangeable, where each unit is the same as the next. This meant that nothing really had a price yet. You couldn't put a price of so many coins on something because they didn't have coins yet. Trade was still difficult. It was still a guessing game when it came to the exchange of values. One of the reasons that we are in the financial mess that we are today globally is that people do not understand the difference between currency and money. Currency is a medium of exchange, a unit of account. It is portable, durable, divisible, and something called fungible. Fungible means that each unit is the same as the next unit. A dollar in my pocket buys the same amount as a dollar in your pocket. Money is all of those things plus a store of value over a long period of time. Even financial planners, bankers, your accountant, they don't understand the difference between currency and money. The currency in your pocket is a medium of exchange. It's a unit of account because it's got numbers on it. It's somewhat durable, it's portable, it's divisible in that you can make change, and it's fungible. A dollar in my pocket buys the same amount as a dollar in your pocket. But because governments can print more and more and more of it and dilute the currency supply, it's continually transferring wealth out of your pocket, out of your bank account, to the government and to the banking system. The reason that gold and silver are the optimum form of money is because of their properties. It's an easy medium of exchange because gold and silver store a large amount of value in a very small area. It's a unit of account. Pure gold has the same value all over the planet. So an ounce of gold buys the same amount here in Egypt as it would in China or in the United States. It's durable. The same gold that Egyptians were using in trade 5,000 years ago is still here with us today. It does not corrode. It's divisible. You can make change with it. It's very portable. You could use something like oil as money. It's just that you can't carry around a barrel of oil on your back. It's fungible. Pure gold is the same wherever it is on Earth. Pure silver is the same wherever it is on Earth. It's limited in quantity. That's the reason that it maintains its purchasing power. Governments cannot print it. Over the last 5,000 years, only gold and silver have maintained their purchasing power. There have been thousands upon thousands of fiat currencies, currencies that are unbacked by gold or silver, and they have all gone to zero. It's a 100% failure rate. In the past several years, I've spoken in many countries about the crisis that's coming, and a lot of people think that they're going to be okay in their country, that it's only going to happen to the United States or maybe the United States in Europe. But what they don't realize is that this is a global phenomenon. I got to show you something here. This is base currency in the United States. This is the number of paper dollars that exist, basically. It took 200 years to go from no dollars in existence to 825 billion. And then we had the bailouts, and then we had QE1, quantitative easing, 1, then QE2, and then we had QE3, and then QE4, and then soon we're going to have QE57 and QE382. And it isn't just here. This is what the Canadian currency supply looks like. This is Australia, South Africa, Russia. Now, this starts out in just the year 2001, and this is like 18 times more currency in existence in a little over a decade. Here's Singapore, same story. Look at that, since the crisis, just bam. India, China, every government on the planet is doing this insane deficit spending and expanding their currency supplies, doing bailouts, and history shows that there is no example of this turning out well. So that all seems pretty scary. However, this is going to happen, and you can only play the hand that you're dealt. But the great news is that gold and silver always end up doing an accounting of the expansion of the currency supplies. Basically, the will of the public and the free markets When governments do this kind of stuff to their currency supply, they debase it. Eventually it comes back in inflation. People sense the loss of their purchasing power. They rush back to gold and silver, and they bid the value of the gold and silver up in the country until it meets or exceeds the value of all the currency in circulation. This is a process that's been going on over and over again throughout history, except this time it's happening on a global scale. It has never before happened in all countries at once. And that means that this is the greatest wealth transfer in history. Therefore, it's the greatest opportunity in history, and it's not going to happen again in your lifetime.
Audio Jungle.
One of the key flashpoints we're looking at is foreign ownership of U.S. government debt. Now, this is a very important thing to understand. We all know that the Treasury has issued over $17 trillion worth of debt. If the Fed's tapped out, we talked earlier about how the Fed's leveraged 77 to 1. So the Fed's at the limit of what they can do. The foreigners are now dumping treasuries. And if no one buys it, guess what? Interest rates go up. That'll sink the stock market. That'll sink the housing market. Higher interest rates mean the debt gets higher. So interest rates go up some more. So you start a death spiral and there's no way out of it. What I call flashpoint number 2 has to do with the petrodollar. It's basically a system whereby oil exports are priced in dollars. Oil doesn't have to be priced in dollars. It could be priced in euros, Japanese yen, Swiss francs, gold. It could be priced in a lot of things, but in fact, the whole global oil market is priced in dollars. Think of the petrodollar, or the dollar's role as a global reserve currency. Think of it as a three-legged stool. So here's the stool, and it's got 3 legs. As long as the legs are standing, the foundation is firm, and the dollar will remain as a global reserve currency. But one by one, those legs are being pulled out. 2 of the legs of the stool, Saudi Arabia and Russia, have already been pulled out. The 3rd leg is China, and that leg is coming out too. You may not like the dollar, you may worry about the dollar, but you've got nowhere else to go. But there is another place to go, which is gold. You don't have to buy treasuries, you can buy gold. And countries are actually doing that. So this is basically a global rebalancing of gold reserves. To take the Chinese yuan, back it with gold, make it a global reserve currency. That's extremely unlikely. That's not what China's doing. What they are trying to do is hedge against the collapse of the dollar. China can't prevent that from happening. What they can do is build up the gold reserves. This is known to the intelligence community. This is not publicly revealed. What if it were publicly revealed? Here's what global gold reserves would look like if the amount that China owns were actually suddenly revealed. This is a dagger aimed at the heart of the dollar. There's something else here, another flashpoint that could melt down the global financial system. What if the US doesn't bring the entire pyramid crashing down? What if it's China? Well, it could very well be. They have a highly leveraged banking system, but the banking system is just the beginning. There's also something called a shadow banking system. This is now a $7.5 trillion industry, and it's up 4,067% since 2005. If you put your money in the bank in China, it's just like the United States. They pay you nothing, 0, maybe, 1/4, 1%, something pathetically small. But they're offering these wealth management products that pay 5, 6, 7%. Well, what are they? Well, they take the money and they buy mortgages on worthless assets, inflated assets, and bubble assets that are going to crash. Before the crash in the United States, before 2008, new construction as a percentage of GDP growth, that was about 16%. 16% is a pretty big slug. But look at China. In each of the last 3 years, construction has been 50% of GDP growth. Now here's the point. In the US before the crash, it took about 4.3 years of income to buy the typical house. In China, it takes 18 years of income. Well, if they're building apartments and co-ops and condos and people can't afford them, the price is going to collapse. One of the senior banking officials in China said, this is a Ponzi scheme. Those are his words, not my words. I happen to agree. But we all know what happens to Ponzi schemes. Eventually, you run out of suckers and they collapse. Once you have enough collapses, there's going to be a run on the bank. The bankers are going to say, sorry, we can't pay you. It's not our problem. Well, that's not going to be good enough. Riots are going to break out. What does it mean when the world's second largest economy hits the brakes? That's going to be disastrous for global growth. It's going to pull the rug out from under the sky-high valuations we're seeing in U.S. stock markets. This is a setup for an entire collapse of the global economy. It's a 10-year plan to replace the dollar as the global reserve currency. A lot of people think that the dollar will prevail because there are no good alternatives. That's not true. The dollar is declining sharply as a percentage of all the reserves. Imagine if that continued. The euro comes up, Swiss franc comes up, some of the other currencies come up. That's one outcome, but there's another outcome that's probably coming a lot sooner, which is that we have a financial panic in the world, and a central bank has to reliquefy the world. Where's that money going to come from? It can't come from the Fed. They're leveraged 77 to 1. There's only one clean balance sheet left in the world. That's the IMF. The IMF, believe it or not, is only leveraged 3 to 1. When the next crisis comes, it's going to be bigger than the Fed. The only source of liquidity in the world is going to be the IMF. Think of it this way. The Federal Reserve is a printing press. They can print dollars. The European Central Bank has a printing press. They can print euros. Well, the IMF, the International Monetary Fund, has a printing press also. They can print something called the special drawing right, or the SDR for short. These SDRs can come along as a new reserve currency. The reason they came up with the name special drawing rights is because if they called it world money, that would sound a little spooky and scary, but that's exactly what it is. But here's the point. This may be a 10-year plan. We're not going to make it 10 years. This collapse will happen a lot sooner than that. So they're going to have to dust off this playbook and run out these SDRs and print trillions of them to prop up the system. Now, if the Fed bailed out private credit in 2008, and the IMF now bails out the Fed in the next financial panic, who runs the IMF? Who's really in charge? Well, it's a nice crowd. You got kings, dictators, communists. They're unelected, unaccountable. And this is the next flashpoint. Really, the IMF taking over the world monetary system, becoming the central bank of the world, printing world money called the SDR.